this is an unloved rally. Nobody's on board. The cash is sitting on the sidelines, yet we're kind of incrementally just plodding our way up.
Yeah, if you actually look at this year compared to last year, right? So the market was down 4%. Last year, you had over 200 billion come into equity ETFs. This year, you have not even half of that, not 93 billion or so, on a 23% rally in the S&P. So it sort of just talks about how the sentiment has been all year. It's just been very defensive, no one really buying into it. And actually, if you look at that, where the flows are going within equities, it's very defensive. It's all low vol, it's all dividends.
Yeah.
So the money that is coming in is very defensive, but there's not that much money coming in, frankly.
Is there any performance chasing going on? Could we see this changing?
So I think we can, and I think where you could potentially see some money come back into equities in the last quarter is going to be some performance chasing. So I just mentioned some of the money going into low vol, but what you're seeing now, because the market's been rallying so much, low vol is starting to underperform by like a pretty noticeable margin. We're starting to see that some low vol money is starting to come out a little bit. I think that can potentially get put into more risk-on stuff. The other thing that's really happening, and you mentioned on the segment before, was sort of some flows coming into Europe. You're starting to see some interesting technical breakouts on some European ETFs. You're seeing some bullish moves there. You're starting to see flows starting to perk up in the European ETFs and on some of the international ones. So I do think if money does come back into equities, it's going to come through Europe or through some of the international ETFs.
Coming to year end, what kind of a factor is that in all of this?
I think that's an important one because typically the fourth quarter for flows in the U.S. is the biggest quarter. On average, it's about 35 to 40% of all flows come in the fourth quarter for the U.S. So
Why is that?
Some of it's tax loss harvesting. So
Okay.
you do have some the end of the year rebalancing. You do have some tax loss harvesting. But last year was really big because the market was down. This year, where you have a really big up market, you're probably not going to get as much as that in the fourth quarter. But just typically, because of positioning at the year end, the fourth quarter tends to be a really big quarter for ETF flows.